So look, really, if we get into October, what's really new now? It should come as no surprise that the 5% deposit scheme is about to kick off. So that is literally just coming in now. You'll see as well, we've already had a pickup due to the announcement of it, but you'll start to see now that you'll have, first of all, kick up because it's October 1, that'll even turn more so. And then for the next, in about 2 weeks to 4 weeks, you have even another gear of a pickup. And it'll be because there'll be a lot of people who will be starting to lodge pre-approvals pretty much now, and it'll take generally 1 to 2 weeks or so to get them through, sometimes more if they're self-employed or something like that. But that's a big thing that's going on. It should be no surprise that market demand is increasing. Like I talk about this pretty much, I have been speaking about this for months, and I said to people, once things happen like this, the market will shift very quickly. So I've been talking about it for ages, but that's increasing more. That's a key thing. And it's also particularly who's buying the market. There is some quite serious buyers coming into the market now. So that's another thing. Residential vacancy rates are falling significantly again. So, you don't really need to, just blame certain things on this. But what you need to know is we have a clear undersupply in the market, and that undersupply is actually getting worse. We did have a little bit of a stabilization with vacancy rates probably over the last 12 or so months, but the number now is starting to fall again. And because of that, the other thing that's due in October as well is the rents are starting to increase in some locations. So, I'll give you an example. So rents in some parts of Geelong are really starting to increase. There's some suburbs in Geelong where they've gone from about $420 or so a week right up to about $500 now, and that's within the space of a year or so. So these things can turn quite quickly. As I said to people, you don't want to be buying basically after these things happen. You want to be buying before. Now, it's not a bad time to buy still, but some of these locations people have missed out on like 20% rental growth, to give you an idea, and probably 15% capital growth. So I've spoken about this for ages, but this is what's going on in October. And particularly the last 2 points, residential vacancy rates falling significantly and rents increasing. That is due to continue in more suburbs in the coming months as well. Look, where we're at really is, first things first, the markets are further shifting. So, look, there are elements that are shifting, and even markets that are towards their, should I say, winner's curse phase of the market. So Adelaide's a good example of that, for example. There are underlying signs. So the market is kicking up, don't get me wrong, in terms of people buying, in terms of because the 5% deposits and the general sentiment. But there are definitely the wealthier people sticking away from some markets now because they are too expensive. And it's very obvious on the ground in some of these. Further rental shortages. So I mentioned just vacancy rates falling. That's what I mean by rental shortages. We have a lot of people coming into the country. I'm not having a crack at immigration here or anything like that. But we are not building enough homes. And it's not only not building enough homes, the particular point I want to make here, it's not building enough homes in the right locations. So you can build all the exurbs you want. You can build as many homes in these massive regional centers in the middle of nowhere that they say they're building, and that the only measure that truly matters is that if the homes or dwellings are being built where people want to live. That's the only thing that matters. So let's not get confused about that. Rental shortages are increasing in these areas. More types of buyers active. So you're starting to get the flippers come back in the market. You're starting to get the developers come back in the market. That is really starting to happen now in certain markets, and I'll get into that a little bit later. Stock levels continuing to fall. This is very common because the longer, and should I say the worse the market conditions are, generally the longer hold period or the selling, should I say, period days on market is. So as that shortens, even if you have the same amount of stock on market, the same amount of people selling on market, the stock levels fall because they're selling more quickly. So it's very common in times where the market starts shifting. Don't get that confused. Again, I did say this in the past, in September, should I say, price points are becoming a major factor. Now, that is not only immune to this market, is quite common in all markets, but I should say price points in particular areas that are expensive and well located are becoming very popular. So I did mention previously the inner west of Sydney for under 2 million. That is sold immediately. Newcastle under 1 million now is it being sold very quickly as well. Parts of Geelong under 650,000, ridiculously high in demand, very hard to buy it well on market. I mean, most of the opportunities I'm sourcing at the moment are pretty much exclusively off market because on market ones are getting smashed. Their guides, it's going above, well above the guides now. The final thing I just want to mention too is the fight to quality, and I've gone dash opportunity here. Now, the reason I say this is because a lot of people are pretty much exclusively trying to buy certificate properties that they can rent out almost immediately. Now, don't get me wrong, there's good properties, there's nothing wrong with them, but why I've put dash opportunity here is because what's happening is certificate properties are selling for like 15 to 20% above market in a lot of the key markets at the moment, right? Now, you'll have structurally sound dwellings that just need cosmetic work, maybe 20, 30K put into them or so, right? And they are selling for 15 to 20% below the market. So the gap is sometimes 30 to 40% between a nice dwelling and then just one that needs cosmetic work, right? And I mean, to give you an idea, that those numbers are massive. So now, if you're talking about let's call it, I don't know, let's say it's $1 million property. That could $300,000 to $400,000 difference there. Now, yes, you have to have more money in the bank in the first place, but they have very good opportunities to do any of that. So that's why I say opportunity, and that's where obviously all the markets are at.